What is happening, guys? Hope everybody's doing well. For those of you that don't know me, my name is Braden Hull. I'm a loan officer with Neighborhood Loans. I apologize in advance. The sound quality on this video is not going to be very great, but I wanted to make this video educational purposes for first-time home buyers, existing homeowners, even realtors. You can use this to refresh our knowledge and share it with potential buyers as well, okay? So it's just going to talk about the, becoming a homeowner and kind of the process and really just an overall big picture of things you need to be aware of. So let's go ahead and dig in. I'm sure we face this question a lot. What is the benefit of purchasing a home besides somewhere to live, obviously? Well, these are 5 big reasons. Lots of reasons, but 5 big reasons. So don't get confused by the big terms here. We'll kind of break it down. So appreciation, real estate year over year, or homes are going to appreciate year over year, which just means they're going to gain in value. So if you buy a home today at $300,000, hypothetically, next year it could be worth $315,000, okay? Equity. Equity is basically the difference between the value of your home and what you still owe on it. So year over year, your home is gaining in value, appreciation, and you're also paying down your mortgage year over year, and that is going to increase the equity you have in your home. Savings. How are we going to save? Renting is way cheaper right now, hypothetically. Well, when you're renting, you're not paying down your mortgage, right? So you're just throwing that money away. As time goes on, maybe not right now, but in the long run, you're going to save more money with owning a home. Equity loans, right? You don't have the benefit of using this tool if you rent. So an equity loan is you can pull money out of your house based on how much equity you have and use it for home repairs. You can use it to pay off debt. You can use it to go buy another house, whatever you want, right? So that's a tool you can tap into. Freedom. If you're renting, you don't have the ability to fix up your home, do things that you want to do. So with a mortgage and a new home that you own, you do. Buying versus renting, we kind of talked about this on the first page, right? So year over year, real estate is going to appreciate or gain in value 5%. The stock market's 10%. So start investing now. An example down below, you can see right here, based on this 5% rule, if you buy a home for $200,000 and you put 5% as a down payment, if you're going to go a conventional loan, that's $10,000. But you're also going to gain that back in appreciation after the first year, right? So that's 100% rate of return. So I know it can be scary, like, financially, what am I going to do? Does this make sense? And because real estate appreciates, it does make sense, right? Yes, find a real estate agent. Even if you know what you're doing and you're very savvy with the home buying process and you're a buyer, yes, you want a real estate agent to negotiate for you. Not only to find your home, but to negotiate for you. So you get the best deal. Okay, so let's get into some ins and outs of the loan process. This is kind of my job to help people understand what the process is and important things to look out for. So the number one thing you need to consider when applying for a loan for a home is your credit score. Okay, this is going to dictate several things, but the biggest thing it's going to dictate is what type of rate that you get. And I know we're all really focused on having a good interest rate. So not only does it affect the amount, the interest rate amount, but it also affects how much that rate costs, right? Because you actually pay on closing costs whatever the rate is. So the higher our score, the better, okay? You will see the minimum credit score that we would need to qualify for any type of loan is a 580. And I will tell you as well that when applying for a mortgage, realtors, this is good for you to know. Credit scores work in groups of 20. Okay, so if I have someone at a 580, if I can get them up to a 600, they're going to get better terms. If I can get them up to a 620, better terms, so on and so forth, right? So if I can jump them up by that 20-point rule, then it's going to get them a better term, better rate, better cost of points on that rate. Another thing to know is that 780 is the max for your credit score. It's not the max that you can get. You can go all the way up to 850, but anything over 780, you're not going to get any better terms. So that's kind of that magic number that we're shooting for. Okay. For your credit, okay, people will ask, how do I, get a better credit score? What do I do if my credit score is low? How do I increase it? So a few things here, a few tricks you can do. The easiest thing and the best thing you can do is pay off debt, right? I think that one's kind of self-explanatory. The credit bureaus don't like when you have a lot of debt, but that doesn't mean you shouldn't use a credit card, because they also like to see that you're credit worthy, that you can use your credit card and pay it off. Use it, pay it off. So that's what you want to do. You want to put a little bit on your card, and then you want to pay it off every single month. Good rule of thumb. Whatever your credit limit is on any particular card, you don't want to go over 10% of that. So let's go easy math. Let's just say I have a Bank of America credit card, and my limit on there, the credit limit, is $1,000, meaning I can't put more than $1,000. I can't charge more than $1,000 on that card. I would want to stay within 10% of that, so that's $100. So I don't want to leave any more than $100 on that credit card at any given time. Anything over that, you will start to see a drop in your credit score, okay? Home buying process, general steps. Get pre-approved first. I can't stress this enough, and what we mean by pre-approved is you will talk to a loan officer or a lender, and they will look at your financials and see how much you qualify for, right? The last thing you want to do, home buyers or realtors, the last thing you want to do is go start looking at houses first that you love, and then you go under contract, then you start talking to a lender, and you come to find out that you can't actually qualify for that home. Maybe it's too expensive, or it's in an area where you can't get, or whatever the circumstance may be. But it's very important that you get pre-approved first. Talk to a lender. You can already talk to an agent, but that agent, we should get with a lender first to get you guys pre-approved to look at the financials, right? Okay. So this is, if you weren't paying attention, this is when you want to pay attention now, because it talks about the programs, right, that we offer. And you don't need to, memorize any of this by any means, but it's just good to know what options you have. So these are a few of the basic programs that we offer that everyone offers too, but we have a little bit more stuff at the bottom. So conventional loan, this is I would call it the basic loan program. It is what most people are going to use and qualify for. It says up there minimum down payment is 3%. That's really just for first-time home buyers. If you've already purchased a home, your down payment is going to be 5%. Minimum FICO is 620. If you have the means, this is the one that you want to use because it is the cheapest money. Okay, we have to borrow money. That's what a loan is. Well, it is the cheapest to get access to that money. FHA, this is a government program. It's a loan program that's backed by the government. So the minimum down payment is 3.5%. Minimum FICO is 580. So you're probably asking, if you're unaware, why would I choose conventional if most of the time I'm going to have to go 5% and I need a 620 FICO? Whereas FHA, I can go 3.5% down and a lower FICO score. Well, there's other things we have to factor into, right? So part of your mortgage is really 4 things. There's your principal payment, your interest, your taxes, and your insurance, right? Well, there's actually a 5th one too, and it's called mortgage insurance. So when you are doing a conventional mortgage, let's just say you're going to put 20% down, you don't have to pay any mortgage insurance. If you put 5% down, once your home reaches that 20% number, or 20% of it is paid off, hypothetically, you don't have to pay your mortgage insurance anymore. So that gets canceled away. When you go FHA, if you're putting less than 10% down, you have to pay mortgage insurance, but you have to pay mortgage insurance for the life of the loan. And most mortgages are going to be 30 years. So in the long run, that's why this one is a better option. Okay, up front, it may not be as much, but in the long run here. There's also something called upfront mortgage insurance that's added onto your closing costs that you have to pay with FHA, right? So keep that in mind. Really, we use this for first-time home buyers, maybe someone who doesn't have a lot of cash on hand or not a very good credit score. But if you have the means, go conventional, okay? VA, this is for our veterans. Really cool thing about this, you can get up to 100% financing, so 0% down, which is really cool. A jumbo loan really just means a loan that is higher in value. So we have what's called a conforming limit. Currently, right now in 2024, the conforming limit is $766,000 roughly, which means any loan amount that's going to be over that $766,000 is going to be considered a jumbo loan. This is increasing to, I think, $806,000 in 2025. So that's really good. Why is that good that we're increasing the jumbo limit? Well, if we have something like let's just say we're buying like a really expensive home, $900,000, $1 million home, we have to get a larger loan. If it crosses that jumbo threshold and goes into a jumbo loan, the cost of that rate is a little more expensive. So if we want to try to keep it under so we can apply and get a conventional mortgage. Okay? But we do have jumbo loans out there. Jumbo loans can go all the way up to $3 million, I believe. USDA. So this is also 100% financing. This is basically for properties in rural areas. So one thing we have to do though is log into the USDA website and make sure that wherever you're purchasing that home, it is in a rural area. And also there's income requirements on this particular loan. So if you make a lot of money and if it's more than the median income of that county, you won't be qualified for this loan. But if it's under and you're in a rural area, you can get qualified for it, which is really cool because it's 100% financing. Renovation loans. So rehabbing your house, we can do that as well. And then a 203K. A 203K loan is actually an FHA loan, but it is a purchase and a renovation all combined into one loan. So you can get financing loan amount for the purchase of your home and for rehabbing your home all in one. Down payment assistance, really, really cool program. It's basically you have a first mortgage on your home, and then we attach a second one to it, and that second one actually pays for your down payment. So if you're getting like a $300,000 home, your down payment's roughly like 10 grand. The down payment assistance program will actually pay your down payment for you. So now you're just responsible for the closing costs. So for first-time home buyers or those that don't have a lot of cash on hand, these are really cool programs. And we have some out there where there's no income requirements. So it doesn't matter how much you make, you can get qualified for it. So it's really cool. Miscellaneous down there at the bottom. I added these in. There's we offer so many programs, but these are kind of like 4 more that we see a lot of. So a bank statement loan. If we have someone who's maybe self-employed, so they're like a 1099, they can actually get qualified based on using their bank statements instead of tax returns. So they will look at 12 years of your bank statements, and as long as you can show income proof consistently for 12 years, you can get qualified for it. So this is for someone, that maybe we only have 1 year of tax returns, or something's a little off in your business taxes. We can go that route with a bank statement loan. Construction loan. These are a process, but they're really, really cool because you get to build an awesome home in the long run. We have a couple programs out there that do a one-time close, so it's the construction loan and your normal mortgage all in one, and then some where it does construction first, and then we do the rate and term normal loan after. I-10 loan, these are for immigrants who don't have a social security number, they just have the individual taxpayer identification number. So we have that program as well, and then a doctor loan. So a doctor loan is for someone, maybe they're in residency and they are basically they have an anticipated salary or set number of income that they're going to make, but they're not making it yet. We can actually get them qualified based on what they're going to make. So that's a really cool program out there as well. Okay, so documents needed. Okay, so this is what I do every single day. I look at all of these documents, we plug it all into this encompassing software that basically analyzes it, right? So if you're trying to qualify for a mortgage, just know that we're going to look at these documents and you need to have these on hand. So last 2 years of your W-2s for all of the applicants on the loan, your most recent 30-day pay stubs, that's how we verify your income, and then your last 2 years of tax returns too. This is for a W-2 employee, hourly or salary working for a company. If you're self-employed, you're not going to have those W-2s. We look at your last 2 years of tax returns, including your K-1s, and then also your personal tax returns, okay? Another part of the income, this is really cool as well. So Social Security, if you're retired, you only have Social Security, you're not actually working as well, we can take whatever income you're getting from Social Security and gross that up by 25%. So whatever you're making, that number plus 25% of that. So that's really good to know as well. Miscellaneous down there at the bar, down there at the bottom, we will need your identification as well. And then another one here, most recent bank statements for all of your accounts, because basically the investor, whoever is giving you the money for the loan, they want to see, does this person have enough money for the down payment and closing costs when they're going to sign at the end to get the home. And then also they like to show reserves, a little bit of money left over in the bank, right? We don't want to use all of our cash to get this. All right, so these are kind of self-explanatory, but the 10 do's of the mortgage process, make sure you get pre-approved. Definitely work with home buying experts, loan officers, realtors. Understand that your FICO score is very, very important. It's the most important thing. Communicate, right, as much as you can with your loan officer and your realtor. Start saving now. It's only going to get more and more expensive to purchase a home over the years. How do we know that? Because of the 5% appreciation rule, right? So it's good for you once you get a home, because now my home's gaining in value, but if I don't have a home and I keep waiting, it's going to get more and more expensive. They're increasing by 5% every year. Okay, this is a big one right here. Don't change jobs. Scenario for you. I had a recent client, they had a W-2 job, but they recently quit that and started to become self-employed. And they came to me and they're like, hey, I want to purchase a home. Well, now we're going to have to wait 2 years, because if you are self-employed and you're 1099, you have to show 2 years proof of that. W-2, you don't. Whatever you have right then, they can take that. So it's very, very important, whatever job that you have, if you're trying to get a home, get qualified for the home, close on the home first, and then you can go change your job if you need to go that route. Stay organized. Keep a paper trail of all those documents. Even if it's on your computer, like that's fine too, but just the more organized you are and the quicker you can get access to the documents, the quicker the closing process is going to be, okay? Obviously pay your bills. These are pretty self-explanatory as well. It's kind of the opposite of the 10 do's we talked about earlier. Big thing here, you don't want to make any major purchases or open any new lines of credit. So if you're in the process of qualifying for a mortgage, don't go buy a new car. Don't, buy a bunch of furniture. Don't get more credit cards, things like that. That is it. Hopefully that wasn't too long. Realtors, you can share this with anyone. Doesn't bother me at all. I hope this provides value for all of you. If you have any questions at all about the home buying process, you can call, email, text me anytime. All right. Hope you guys have a good day.